conservative with my trading. Still still up for the month, but still just being slow and cautious with it. There's just a lot to do. So, but I've enjoyed being back. I've enjoyed talking with the members, and obviously I enjoy being back on the show. So.
Wonderful. It is, of course, great to have you back. And guys, you know how the next 90 minutes is going to unfold. Justin, of course, will be back after I take us through the intro in this news segment. He'll, of course, be hopping on in the next 30 minutes to get into the TA element. We will be, of course, getting to your requests as well. Not too many, of course. You know how Justin does like to really dive into each request and put it through its paces, guys. Get you on a bit of an educational tip relative to what we do on most days. So be sparing. Be sparing with those requests, guys. Be aware that we only do so many, and we might even incorporate that super chat thing we mentioned last week. With that said, guys, let's wave goodbye to Justin for now and get into the aforementioned news. Justin's screen aside for now, and let's do it. Got this first piece coming from Crypto Briefing. Bitcoin looks set to dip after traders lose $700 million in liquidations. I merely bring you the headline here. Bitcoin plummeted about 9% Wednesday, reaching a low of 62,800. Downswing led to more than 700 million liquidations. And yes, there's a lot of questions in the air. Will Bitcoin correct further? Do we have to take a trip down to the 50s? I'll save the further TA and speculation of this article because we got our own crack team of analysts on the show every day to discuss the actual price action. But we lead with this headline today, guys. Liquidations rocking the space. Let's go ahead and get into the next piece. Daily Hodl writes, SEC Commissioner releases statement on crypto, says DeFi presents a wide array of opportunities. U.S. SEC Commissioner or SEC Commission official is offering clarity on DeFi while weighing its benefits and risks. In a statement, SEC Commissioner Caroline Crenshaw says that DeFi offers a notable opportunity and advantage, but aspects of the sector remain riddled with confusion. Here's a little quote. DeFi presents a panoply of opportunities. That's a new word for me. However, it also poses important...
Just means a whole bunch of.
Yes. Well, let's have a look. Google says a complete or impressive collection of things. Okay. Well, that's kind of new to me. I would have thought menagerie, but sure. Panoply of opportunities. However, it also poses important risks and challenges for regulators, investors, and the financial markets. While the potential of profits attracts attention, sometimes overwhelming attention, there's also confusion, often significant, regarding important aspects of this emerging market, Crenshaw said. And notes that investing is at the core of DeFi activity, and one of the benefits participants enjoy is the ability to transfer assets quickly and easily. Crenshaw goes on to say developers have also constructed smart contracts that offer individuals the ability to invest, to lever those investments, to take a variety of derivative positions, and to move assets quickly and easy between various platforms and protocols. And there are projects that show a potential for scalable, increased efficiencies in transaction speed, cost, and customization. So the SEC Commissioner does say that relying on investors to conduct the proper due diligence before investing in DeFi is absolutely inadequate. Accordingly, DeFi participants' current buyer beware approach is not an adequate foundation on which to build a reimagined financial market. Without a common set of conduct expectations and a functional system to enforce those principles, markets tend toward corruption, marked by fraud, self-dealing, cartel-like activity, and information asymmetries. Over time, that reduces investor confidence and investor participation. So this last part, making a case for themselves why their particular racket, their governance over the system. What am I looking for? The oversight. Yes, the authority that they practice over the system here is them making a case that, hey, there's so much that we do for traditional finance. Let's make a case for investor protections over in this new space. Crenshaw says that some DeFi ecosystems ought to be under the SEC's jurisdiction, and developers should therefore seek clarification from the regulator if they are unsure about the status of their project. And yeah, the commission also notes that a variety of DeFi participants' activities and assets fall within the SEC's jurisdiction, and when they involve securities and securities-related contracts, these participants should be contacting the SEC and registering with them. Indeed. we're heading toward a great regulatory culling, it seems like. I hope some of these projects are doing their due diligence. If they're not registered now, I think a time will come in the near future where they very well will have to. Basically, I do think DeFi is going to come in and sweep the world of banking, but I don't think it's going to be like a complete Wild West approach. I feel like we might see a great deal of regulation enter the DeFi space of all things, and I think we will get our DeFi cake, but maybe not quite get to eat it the way we wanted to. Again, I think it's going to be laden with regulatory strings before they give the go-ahead for consumers to go ahead and go crazy at the DeFi buffet table. What do you think, Justin? What do you think of this commissioner's comments here?
It's interesting because he does bring up a good point. And it is just an unfortunate state of human existence right now that systems tend toward corruption, right? People tend toward entropy, things tend toward entropy. Which, the way I visualize that means that, yeah, systems do tend toward corruption. If you start putting all of your cash in one place, let's just imagine an example or an analogy where we have like a village, and that village earns some form of money. They use some form of money, and they institute some form of central security system like a bank to safeguard everyone's money and process transactions and things like that. If you have oversight in that, if you have some form of centralized control in that system, it's going to tend toward corruption. And kind of the word that stuck out to me here is the information asymmetry, which is certainly true, but that's no different than traditional markets as well. In traditional markets, you have a small percentage that are reaping the massive amount of rewards, and a large percentage that are failing out. Remember, I was talking about this with Dogecoin the other day, or excuse me, the Shiba Inu guy. I think I didn't mention this on stream, but I was talking about this in the mentoring session. For that individual to make $1 billion, the markets are a zero-sum game. For him to have made over $1 billion, that means that in aggregate, some individuals had to have lost that much as well. Taking profit is the other side of the coin of somebody taking a loss. So something interesting to remember there. The difference in DeFi is that certainly in a small pool like this, that you have groups, you have sharks, you have developers and programmers and groups, rug pulls, all of that. This is information asymmetry where the strong are taking from the weak, but that's just what it means to be human. There's no way to get around that. The difference with DeFi, though, is that it is far more decentralized. So the more users that participate, and the more users that participate in the more liquid activities, things like Compound, things like MakerDAO, for example, Curve Finance, the DeFi projects that have been around a while and have a lot of decentralization, or DAOs, or decentralized exchanges, these are far harder to corrupt. So two things are true here at the same time. It's not cognitive dissonance. It's just two things are true that seem initially contradicting. One, the crypto markets are a little dangerous, of course, for your average uneducated retail investor. However, simultaneously, those who follow simple strategies, for example, whether that's buy and hold, dollar cost averaging, or something like a pathways to profit trading system, the upside far outweighs the downside to a large degree. But it's also true that, no system that is imbued with power is going to do well minus regulation. I'm just very confident that this is not the type of regulation that we need. We need regulation in code, not regulation of authority.
Yeah, it's really a matter of, is buyer beware sufficient for now, guys, or do you feel that the space is in need of a bit of a shakeup, and buyer beware just isn't sufficient enough? Really are kind of rock being in a hard place. It's the corrupt scumbags in positions of authority in these regulatory bodies versus a world of scammers and frauds in the space as well, right? So it's which side do you really want to side with? It's zero. It's almost a zero-sum game here, picking between these two. But there you have it, guys. Let's go ahead and get into this next piece. It is a buyer beware. Maybe we do need more protections for the average person, especially when it is going to be, maybe your mom engaging with a DeFi protocol for her savings program, in the future. Maybe normies Main Street do need some protection, especially when it comes to some simple things like savings and loans. There's certain expectations Main Street has of their banks, maybe similar Similar things need to be available with DeFi, insurance, etc., some regulatory oversight, right? To make people a little more comfortable at night with their savings locked into some of these protocols. With that said, that's enough of that, guys. Let's go ahead and get into another piece here.
Just one quick point on that,
Yeah,
real
go
quick.
ahead.
Remember, this is something to keep in mind. Every law or statute that's put in place to quote unquote protect retail investors is just a rule that those with more power and that are more instantiated in that particular system, banks, hedge funds, professional traders, algo prop firms, things like that. It's just a rule for them to abuse because there's information asymmetry. So what I really do like about crypto's approach to this is that, so my answer, I guess, to your question would be buyer beware. It should always be sufficient, because otherwise we are relying on centralized authorities to instantiate rules that may protect you a little bit, but they open up the avenues for your alpha, your ability to actually profit off of this and get the real benefit of this, which means more dollars in your pocket. That's what it always means. Starts to erode, and that opportunity goes to those centralized institutions that have the power, ability, and time to really hammer on that rule. Right now, yes, it's dangerous, but the thing is, it's fair. All you have to, it's not like certain individuals in cryptocurrency or DeFi can make money and you as a retail investor can't. You can. All you need to do is educate yourself and learn the game. In the banking sector, it doesn't matter how smart you are, you just don't have the power to do it. It doesn't exist. Only banks can do it. So that's why, yeah. So Ron Legato has a good point there. I'd rather tolerate the scammer and be educated to know how to avoid the scam than be completely powerless at the hands of some really entrenched, instantiated regulation.
Exactly. Yeah, subject to them and the regulators and their whims. Indeed, this is this is providing, I think, almost a once in a lifetime opportunity. Something I talked about before on the show, guys, you do remember, is this whole GME debacle and even this crypto thing. One of the, call it a conspiracy theory of sorts. I always wondered, what is this whole GME thing? Are we heading into a potential 08 style financial crisis in which they might lay the blame of the collapse of the system on systemic risks like stablecoins, crypto, irresponsible Reddit GME investors, right? I could see a narrative, and I have been talking about this, like I say, for a while now on the show, a narrative potentially forming in the future that when the next economic disaster does strike, they might lay on the feet of retail. Apps like Robinhood giving retail inappropriate access to capital markets and causing disasters like this. And they might blame it on crypto, they might blame it on DeFi, they might blame it on stablecoins, or just merely retail having access to these markets. And I guess what I'm saying is that, this whole thing in the future, you will own nothing and you'll be happy. I do think that they might have a pretext to kind of isolate people away from capital. They might say this is just too dangerous of a tool for retail to have access to. And we really need to have this in licensed brokers' hands. Otherwise, it leads to market calamities when retail suddenly can wield billions of dollars in decentralized, payment networks. So, I guess what I'm saying is, there's other side to this. One where they might use a lot of our permissionless of all this to against us, to kind of rail on us. With that said, guys, enough of this extended piece. Let's go ahead and get into another one. We got a couple more minutes left in the news. Sotheby's auction house to hold real-time bids in Ethereum for a Banksy art auction. Wow, it's historic when the auction house Sotheby's announced Thursday it'll have real-time bids in Ethereum for its upcoming auction of a Banksy painting. The auction, dubbed The Now, will occur on November 18th and consists of Banksy's Hunters in Love in the Air artworks. Paintings are estimated to go between $5 and $7 million. Hold the auction in his digital headquarters in Decentraland. Wow, that's pretty crazy. It's one thing to take, I guess, Ethereum bids online. It's another to even route them through Decentraland, kind of. Pretty cool. Again, maybe not everyone here maybe is a Decentraland head or an NFT jockey, but still kind of an interesting day when the famed auction house is now moving auctions to Essential Line taking bids in Ethereum. We have seriously woken up in a digital future. All right, enough of that. Let's go ahead and get into this next piece. Daily Hodl. Let's see. Markets choosing Bitcoin crypto over paper. Pantera Capital CEO Dan Morehead. Let's see what he has to say. He claims that Bitcoin is entering a new price era as the valued U.S. dollar crumbles. Guys, the death of the U.S. dollar has been greatly exaggerated over and over, but let's have a look. We've talked about this yesterday as well, how Bitcoin's shines in this inflation narrative, right? The dollar collapse narrative, which I don't necessarily put a lot of stake into, but it certainly does help drive the price forward, right? Morehead notes in a new blockchain letter that inflation is at 30-year highs and housing affordability has plummeted to its worst level in over 15 years. Writing, the market is choosing Bitcoin and other cryptocurrencies over paper money, with which governments are conducting a very dangerous experiment. Morehead notes that U.S. dollar has plummeted to all-time lows against hard assets with distinct quantities, including the S&P 500, copper, gold, sugar, lumber, oats, oil, and Bitcoin. The CEO writes, Pantera's core post-pandemic macro theme has been the unlimited printing of money will push up the price of things whose quantity cannot be eased. The largest crypto asset by market cap obviously has primed to surge, Morehead says. Bitcoin hit new all-time high in October, and let's see here. The last time Bitcoin retook its all-time high after falling 50%, it went about 3.2x shortly after. All right, so Morehead, or Morehead, depending on how you pronounce it, expecting maybe up to a 3.2x on Bitcoin after the big correction. Where would that put us? 3x from where? 29k-ish? 3x from 50k? Either way, that means big pump ahead, according to Dan Morehead. There you have it. I don't think I have a lot more to add. Justin, what do you think? This is ever a time for Bitcoin to shine, you know? 10 years ago, we were in the '08 crisis when Bitcoin emerged, and here we are 10 years later, a very similar narrative, very similar atmosphere, right? It's like '08 all over again. This time, Bitcoin's 10 years older and ready for it, right?
Yeah, I mean, just I guess as a disclaimer here, nothing's immune to market volatility. Like markets will ebb and flow, but just one thing that I keep in the back of my head and that I hope will be helpful to you guys as well is that you have a responsibility to yourself to be prepared for what happens ahead. And there's a reckoning coming. I've been saying that for a long time. And unfortunately, just as we were talking about with DeFi, just a moment ago, we were talking about DeFi. We were saying that, yes, it's scary out there. Yes, it's the Wild West. But if you're educated and you just strengthen yourself and you develop the tools to deal with that, you can make money and you can do okay. The same's true of life. We all have to develop our own survival strategies. And there's really no one out there that really cares about protecting you except for yourself. When things get really, 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 really bad, and you can just see this all throughout history, the police won't be there to save you. The government will not be there to save you. The military will not be there to save you. This is just not how things work. I mean, obviously, I don't want to speak ill of those institutions. They're going to do their best, but nobody's going to be there for yourself. And if you don't have capital, if you don't have funds, if you don't have something of value to trade with other individuals for what you need, then you're going to be on the wrong side of the reckoning, and nobody wants that. But unfortunately, there will be people. So all of you just need to kind of look into your own hearts and ask yourselves what side of that split you want to be on. So how that relates to this is just, Bitcoin is a good performing hard asset, and it's got a lot of potential for the future. It's a good alternative to cash. It's more people are starting to realize that. More people are starting to value their wealth in Bitcoin. More will continue to do that. And this is just going to be a trend that continues. And the United States government's in a dangerous position with their currency, and there has not been a historical example of a country that's been able to put themselves in this position where it's ended well. Now, obviously, things might be different. The United States might actually be in a unique space, but that's not. I don't believe that. I really don't believe that. I've listened to some economists, Economics Explained is a pretty good YouTube channel, and he says that a lot. It's just like his disclaimer that, the United States might make it through this because, it's in a unique, novel position of power and influence around the world, but it's really not. It's really not. You can see the United States government weakening. You can see desperate attempts to keep prices level. You can see desperate attempts to get the economy going. and because of this, they've put themselves in a bad position that just is, it's not gonna end well. You know, all debts eventually come calling, and I don't think the United States is prepared to deal with theirs.
Yeah, I could see a case being both ways, right? They are, you know, a major superpower, and yeah, maybe they can force their interest through on everybody else. But at the same time, I do see also a case of, you know, maybe the empire is in fact crumbling and is on the verge of destruction. It's a tough call. I still do anticipate the U.S. dollar to be the last one standing, but you know, we'll see. This will be, I guess, vetted out another day. Let's get into one of the last stories of today, guys. We have a couple minutes left in the news. Let's get into this piece. We touched on this just the other day. In fact, I was pretty excited. I guess no longer is the case. Crypto Briefing reports Discord scraps the Ethereum NFT plans following community backlash. Why am I not too surprised? Discord is pausing its crypto plans after heavy resistance from users. Discord founder and CEO Jason Citron has suggested that the platform will pause its plans to integrate Ethereum wallets. In a Thursday tweet, Citron wrote, "Thanks to all the perspectives, everyone. We have no current plans to ship this internal concept. For now, we focused on protecting users from spam, scams, and fraud. Web3 has a lot of good uses, but also a lot of problems we need to work through at our current scale. More to come soon." The post followed a Tuesday tweet in which Citron suggested that the messaging app may be integrating Ethereum, potentially paving the way for users to exchange NFTs, ERC tokens inside the Discord app itself. Citron teased a screenshot that appeared to show an interface allowing users to connect Ethereum to Ethereum via Web3 Wallet, MetaMask, and Web Connect. Yeah, so we talked about this, I guess, on Tuesday, guys, and I mentioned it was pretty exciting. This, along with news like bringing similar Web3 functionality to Twitter, will do wonders in adoption. But initially, people are very, very apprehensive. We discussed this again on Tuesday. A lot of the normie users, because Discord is a gaming app, and you know, these are started as gaming app, now it's more of a social app, but you know, a lot of the gaming community's not too big on crypto. A lot of the Reddit and other type normie computer communities, not big fan of crypto. In fact, a lot of people have a distaste for crypto. They think it jacks up GPU prices, that, you know, it's just all scams and money laundering and fraud, and crypto just has, among some people, still kind of a bad rep. And so when Discord announced that it might be doing Web3 integration, which is honestly could be pretty valuable, knowing what we know about how many bots and spam attacks the platform, it's possible Web3 would be very, very useful functionality to explore for Discord and its users. But hey, today we didn't win this one. The community sounded off, and they didn't like it one bit, pushing back dramatically on this idea of integrating Ethereum NFTs and Web3. I imagine it'll come sooner than later, but at this day, it's gonna have to be suspended. Let's get into maybe one last piece. Trust Knows reports millennials lead in the Great Resignation. Yeah, here's a great one. We might even wrap on this particular story. 30-year-olds are quitting their jobs. That's the finding in this new Harvard Business Review, which after studying 9 million employee records says that, whoa, employees between 30 and 45 have had the greatest increase in resignation rates, with an average increase of more than 20% between 2020 and 2021. That's a huge number, with this not just a fluke, as resignations rose in 2019 as well, reaching the point where in July 2021, 4 million Americans have quit. Everyone is struggling to explain why, but to us the answer appears obvious. We are in the middle of a renaissance due to the dominance of globalization and liberalism, at least economically. We're also at the dawn of a peace dividend, which coincides with years of innovative development reaching the stage of being in or nearly in production. After what should be called the great struggle for this generation from 2003 until about 18, when in late teenagehood or young adulthood they were just spectators of war and sleaze, they've now become the actors, ending the war, and now is the time to end the sleaze. Man, this is quite the op-ed piece here. I guess the idea nonetheless, though, is still focusing something as to kind of summarize. This is a lengthier piece, actually. I will leave the link in the description below, but nonetheless, the main thing to take away here, and this is something I've observed as well, right? More and more people, especially, I guess, kind of young people, young adults, maybe not quite young adults, but 30 to 45 demographic, right? Maybe not middle age, I don't know what I'd call this, but the 30 to 45-year-old demographic is something I've observed as well. People are kind of walking away, right? Walking away from, maybe the city life. I see a lot more people. We discussed this on the show before as well. More people kind of going full circle, right? We left agrarian society to move to the cities post-industrial revolution, right? Because nobody wanted to farm and sweat and toil in the fields. But now we've kind of come full circle. I've seen people who are checking out of city life, checking out of the corporate working life, and they actually want to return to things like homesteading far outside the city. And so I think this what we're reading here from the Harvard Business Review kind of, I'm not saying every one of these people is abandoning work and going immediately to live off the grid or something, but I do think there's certainly a trend afoot, particularly among young people. Maybe the career, the city life, it's not what people necessarily want, and now, maybe crypto and working from home, working on the internet is providing the right opportunities for people to finally live the life maybe according to their terms. Justin, what do you think? You think there's something to this trend? Are young people doing something different?
Yeah, I mean, there's a lot here. It's just this has been this has happened. Again, there's nothing new under the sun. The book says, this has happened a bunch throughout history. Just in different flavors. Basically what we're seeing is just the way I try to view it is just individuals, but it's happening in aggregate are just over it. They don't really see the same American dream, the same American promise. There's been a degradation of work value. There's been a degradation of family value. This whole idea of individuals leaving their families, moving into the city, and kind of starting their own nuclear option. There's been an American staple since, the 1950s, and it's maybe even earlier, and it's quite a terrible idea. If you look at what wealthy people do, wealthy people don't kick their kids out. This is hard, especially as a parent, because you don't want your kids to just sit around and be lazy. There is an element here that you want to. I certainly wouldn't want to encourage this type of I don't want to work behavior. However, the opportunities aren't there, or at least the expectation of realized gain is sorely lacking in individuals. So yeah, I think this is something that's likely to progress. I think that individuals are and also at the same time, they're not bad for this, or they're not wrong for this too. Look at just look at all we were talking about, the reckoning. We're talking about all these inflation problems. We're talking about the rising costs of everything. Very simply, people are being priced out of existence. That's really what it was. You might call it gentrification, but just expand that to access to housing, and gentrification is access to housing. Expand that to access to food, healthcare, clothing, and it doesn't really matter how much free money they throw at individuals. It's got to come from the bottom up, not the top down.
Yeah, I was watching a documentary the other day out of China, and there's a name for this. I can't remember. It's some kind of colloquial term for this in China, but it's for a generation of people who are now checking out of the workforce. So they're not. It's kind of not quite homeless, because they kind of cattle the homeless over there. But it's a type of people who live a really minimal existence, right? They get some basic welfare, and they'd rather live a very cheap, basic life, practically homeless, maybe couch surfing in China, and that this is a growing problem for the Chinese economy, and that people are just done. They don't necessarily even in China, right? Where the labor camps of industry flourish. People are checking out over there, and that there's a huge problem with their economy, where there's in fact even a labor shortage in certain sectors where they cannot do enough to recruit, hire, or pay people to stay and work in certain factory settings. People rather just live a very minimal existence off the government dole, and it goes to show you that maybe every culture, every society that industrializes and goes through this maybe goes through a similar pattern, right? We come up, we leave our kind of smaller, simpler lives in the country to go to the city, and now eventually you have enough of that too, and you want to do something different. Well, now these crypto is empowering some young people to do that. And what's cool, that's kind of what we do here in the CC community, right? Kind of teach people how to work from home, trade, become kind of independent. charge of their financial destiny. So I thought this was analogous to what we do here, guys, to our community. If you guys want to check this article in a little more detail, the link will be in the description below. That's it for the news. I'd love to cover a little more. I might cover these next few stories tomorrow. This one piece talks about, now that Facebook and Microsoft have thrown down in the metaverse, in this metaverse war, are we going to see, what could be the corporatization of crypto, right? This is meant to be a decentralized type of industry and affair. Well, now, what does it mean when the juggernauts, Microsoft and Facebook, throw down in this space? They just gonna steamroll over everything? Elon Musk sold $5 billion worth of Tesla shares following a Twitter poll. Is he gonna buy Bitcoin? And finally, Evergrande has defaulted. We'll cover all this probably tomorrow, but that's it for the news, guys. Thank you for kicking it with us for this portion of the show. Let's go ahead and get into the crypto bubbles. What's going on in the alt space today? Oof. Kind of red, go figure. Hex is having a hell of a bounce. Hex is up 26% to lead today's big gainers. So nice big recovery pump on Hex, as everything else in the space is, well, relatively flat or kind of down. Let's first mention a couple winners, not too many of them. KDA and Omizigo are both up about 10%, HNT about 6%, and Sheeb eking out a few points for itself today as well, but everything else is down single-ish, almost double digits across the board. Yep, a lot at negative 9, 10, 11% losers across the alt space today. About what you'd expect, given the interesting volatility to come through and a bit of profit taking that rolled through the space Wednesday evening. With that said, guys, there's a brief look at the bubbles. We'll be exploring a few more coins and charts in a few minutes. Let's get into the live chat. Let's see, where is our dear loyal audience with us today? Mr. Ether came through with a $20 super chat to open the day. Big shout outs to Mr. Ether. Thank you so much. Robert Warner of the live chat, the $20 super chat goes a long way. First in the chat with the request for Hex USD. It's a beautiful day outside and I love the new show format, he says. Well, thank you so much, Mr. Ether. I will add Hex USD to the request line. ETH1, waiting for my crypto to inject in my veins. My man, I think you're doing it all wrong. Do consult a professional. But shout out to ETH1. Okay, it's all good over here. Well, I'm glad to hear that. Justin Wise says, good morning, everyone. ETH1, I already mentioned. Peckham 08, evening, my most fire of people. I bought the MFD on WaxP last night at 49 cents. Well, Peckham 08, you are the resident WaxP expertisto here. I wish you the best of luck on your 49-cent WaxP pickup. Let us know how it goes. Alex81SG waving hello to everyone. Big shout outs to Alex. Jonah loved the show. Big shout outs to Jonah writing good day peeps. Let's see here. Yes, Justin opened with no mic. Sorry, guys, we were muted for a very brief part of the intro. That was all fixed. And Mice Elf is with us on YouTube. Big shout-outs to you. Anthony Cox on YouTube as well. Shout-outs to you. Jonah loved the show, already mentioned. I see a request here. We'll wait for that. Boris F. I see you as well. Jimmy Dice on YouTube. Karen on YouTube as well. Thank you. Yes, I thank you for all the comments spurging out saying that the mic is gone. Yes, we fixed that. Someone claiming about seeing the man behind his desk. Yes, well, there's something calming about seeing the man behind his desk. Well, it certainly is. I love seeing Justin come through in the desk view the way we've gotten to know him over the years. Mr. Justin seated at the desk, spitting raw on the charts. Let's see. I want to know Justin's opinion about SLP. Again with the SLP. You guys love giving Justin the SLP request. Hang tight. We will get to a few requests in a little bit. Murdoch the Murloc is with us today on Twitch. Big shout out to you. Franklin MC. Bonjour, mamie. Yes, bonjour to Mr. Franklin MC. Murdoch the Murloc. Uma and BNT. All right, I'll add those. No guarantee we'll get to all of them. Starbucks to release rewards using NFTs. Hell yeah. It's pumpkin spice latte NFT. Sign me up. That's going to be a big one. Omar Habikin, can you check NOIA? Yeah, hang tight. What's up, Justin in chat? Yeah, shout outs to Fifth Ronin as well. We're almost, a lot of comments today. Big shouts to Polly B, Cavano Trades, Ron Legato. Any word reminding us the Fear and Greed Index is 77 over 100 today. Mike Maker, Ali on the YouTube chat, Moonshine Fuel. I'm low on time, guys, so I'm just going to shout out a few more homies. Profit Bear, Janix, Crypto Cats, and Electric on YouTube as well, and Vancity over on Twitch as well. Glad to see you back, my man, Vancity. All right, I think that's about everybody, guys. We are low on time, so I'm not gonna. There's a lot of comments today. People are clearly very excited to see Justin on the show as usual. So big shout out to you all. Sorry if I missed any messages, but we do have to carry on to the next segment. Leave plenty of time left on the other side in order to get your requests and such, right? So let's do it. Justin, you're good for getting into the main scene?
Let's rock.
Let's do it. Justin, main scene comes your way now. All right, brilliant. We got Justin on screen, and he's looking at the market dominance. Perfect. I think we're all synced up. We have a slightly different layout for today, guys. Justin will be on camera for duration of the TA, making things that much sweeter around here. All right, I'm good. Justin, you take it away from here. I'm gonna start extracting people's requests.
All right, thank you, Jack. Appreciate that so much. All right, guys. Hopefully you're doing well today. Let's take a look at the markets. We got let's just go over to Bitcoin and kind of start with the obvious, you know. So let's just go over here to Bitcoin. We'll look at BTC.USD. This is going to be on Bybit. All right, so let's actually pop over here. I like this a little bit better. Start off with the weekly. Still not a Heikinashi trend flip, so things still looking decent. There hasn't been a reckoning of this uptrend. We're still on a 6 of 9 with the TD sequential, so potentially 3 more weeks of upside. When we get into the daily candles, we can see the liquidity hunt to the downside, but again, we are still trading above the previous TDST resistance line, which I really do like. That line is again coming in around 59,626. So again, there is one level of support for BTC. We'll kind of see the corollaries between that and other levels here as we kind of progress through this. Let's get down on the daily. Daily time frame. The only thing that's concerning here is again how extended from our baseline we are. There is a pretty large correction. There's about 25% downside here, but again, BTFD opportunity if that does happen. But again, 59 and 52 are pretty good levels for your DCA entries if you are looking at that. And again, I don't yet see the signs of that happening. We haven't crossed shorter term baselines for individuals who are using baselines for like active daily swing trading, and overall things don't look too bad. Let's see here. Generally, well, not generally at all. 3-day chart looking good as well. Volatility is really high, as we can see right here. So just keep that in mind for you guys who are trying to day trade or kind of short-term trade Bitcoin right now. Volatility is really high, which just means that positions are dangerous. Things that look like good entries can often not be good entries, and things that look safe are often not, especially if you're doing like overbought, oversold pullbacks. Those can be a little tricky. So, all right, so let's see here. Let's look at the daily time frame here again, just kind of zoom in on this. There's no continuation signals. There's obviously no short signals as well. So for individuals, there's really kind of a no trade zone as well. Looking down at the lower time frames, we can see that Bitcoin is overall just putting in sideways consolidation after that liquidity grab right now. Yeah, I talked about this earlier. Generally, good entries here are going to be looking for liquidity grabs below recent lows. So areas like, you know, the upper 63,000s actually have a bid in right there to try to take Bitcoin back up to the upper range and take that play. But that's on a 4-hour time frame, not really the 5-minute time frame, obviously. But of course, you can always try to sniper your entries on the 5-minute time frame. Again, with high volatility, there are going to be opportunities. You could just hear my momentum oscillator ISA spot has kind of given multiple good entries down here, going into the oversold areas, taking that up to the overbought areas. Typically not a bad strategy if you are doing the short-term time frame stuff on BTC. Let's get back over here and again, just look at this trade setup. When we look at the 4-hour chart, again, we can kind of position a better entry. Where did price really dip down to? Well, we can see that we've had this ascending level of support all the way back from the 13th of October. Really actually stretches back a little bit farther than that. But again, you don't want to really extend these things too far. You start to see patterns where nothing really exists. So for looking at this as a tradable setup, I like the short-term trade of taking it directly below our current area and trying to take price back up to the upper range. A couple different take profits there. The other opportunity would be to try to set lower bids somewhere around this trend break line. And again, if that trend does break, then we'd be looking to scoop up bids around the daily baseline, all the way down a little bit lower than that. Again, that's another level of support that we established over here with this consolidation zone. Also VPVR level as well, point of control. Good stuff there. I don't see shorts on the table, although you can counter trend trade the way to the downside. But again, when price is up, when price is bullish, I like to trade bullishly. And the opportunities, the 2 attempts that I tried to take counter trend trading that I took yesterday got slapped in the face. So that goes to show you can make mistakes no matter how long you've been doing this. Couple other Let's see here. A couple other BTC fundamental stuff before we get into some other charts here real quick. Bitcoin dominance is pretty interesting. I was actually looking at that when we started off the show. This is Bitcoin dominance right here. One kind of interesting concept that I've noticed is that, and actually this is a pretty good experiment. Maybe you guys can give me your opinions on this as well. But when Bitcoin dominance is below its baseline, that would tend to indicate that more money relatively is flowing into altcoins, and altcoins can be more profitable trades while Bitcoin is declining. However, at the same time, keep in mind that that also might indicate that overall market capitalization is going down. So you need to correlate that with total market cap or total to market cap so if Bitcoin dominance is going down and altcoin market capitalization is going up, it would indicate that altcoins are more profitable to trade than Bitcoin. And that means that the old adage of, is it more profitable to trade altcoin or hold Bitcoin, is actually not true in that example. But generally, if Bitcoin dominance is quite high, and if you don't have a high hit rate on your altcoin trades, if you have a high hit rate on your altcoin trades, it doesn't really matter what the market capitalization is doing because you just have a good steady hit rate. But if you're a systems trader and you've noticed that your altcoin hit rate is relatively low, you might want to take a look at what what BTC dominance looks like and what the altcoin market capitalization looks like at those particular points in time. If you go back and plot your losing trades on the chart and see if there's a correlation there. So this is kind of something that I'm working on. And I think it's just an interesting way to get a little bit more alpha, to be quite honest with you. Again, I talked about volatility being quite high, so just try to be careful, guys. All right, let's go take a look at Ethereum. Ethereum's been moving just a little bit differently, and we're going to go ahead and look at the spot index. All right, I had marked out again this order block that was controlling price over here. That's actually where price dipped down to on this recent low. One kind of dangerous thing about taking, and this is why I didn't take a market buy like this morning when I came down to my charts, when I started looking at the charts this morning to prepare for the show. Like, one good reason not to market long from this particular area is that we've already had, you can talk ill or talk positively about them all you want. But if you plot Fibonacci retracement off this recent pullback, we've already gone up to that golden pocket that people call that, that 0.618. And there's not a lot of room for price to go in the short term up. So I really do think the better option here is to wait for another pullback. Remember, this is something that I've said a lot, never buy the first bounce. And this would be the first bounce kind of on the slide down. Long-term positions, really nothing's changed as far as that goes. I'm still holding my Bitcoin spot long. So that's the only active Bitcoin position that I have as far as holding Bitcoin spot long. And Ethereum as well. I hold Ethereum spot long as well, but still not an active trade. So I think we're likely to see a pullback here, continuing following this little bit of a rally on the 4-hour time frame. And then I think there'll be another buying opportunity. Whether that's at that low bid, we'll see. We'll see when my bid gets filled, if that's a successful trade, or if price actually goes back down, either to the daily baseline for a more significant significant retest, or whether we actually do of ascent at that point. But keep in mind, again, this would be breaking a very long uptrend. So I'm just going to draw that same trend line. Bitcoin's been following that same trend line. Ethereum's been following the same trend line. And it's really been like clockwork. We can just take this up and just see this this ascending channel and pattern. This has been really easy to trade for discretionary trades. Just looking at the chart. Again, although we're systems traders, you'd have to be blind not to see something like that. And again, there's no reason you can't build a systems trading system around those I don't want to call it really reversion to the mean, but it is really a reversion to the mean strategy. When price is ranging, most people assume that when price is ranging, that means price has to be going sideways, and that's not always necessarily true. Price can be ranging or acting in a ranging motion while in an uptrend, and price can be ranging on the way to the downside. It depends on momentum and volatility. If volatility is in this example, on this uptrend, volatility has been quite high. Let me show you an example of something where volatility is very low. And momentum is high. So right here in this uptrend, for example, on Ethereum, volatility is actually quite low, but momentum is high. Here on this uptrend, for example, volatility is relatively low, but momentum is quite high. So volatility is when something is oscillating very wildly around its mean price. So VWAP is very helpful, or a shorter baseline, a shorter moving average is very helpful to determine that. So for example, let's actually switch this from a 50 to a 9, for example. And that's going to be the daily. So let's actually switch this to the current time frame. There we go. Okay, so this is a good example of volatility. This is the definition of market volatility. So we can see the 9 exponential moving average up here, and we can see that price is oscillating around it quite wildly. That's the definition of high volatility. So when you see something like that, a reversion to the mean strategy can actually be a good system strategy to implement. Again, kind of the more nuanced aspect of systems trading is knowing exactly what system to turn on when. Unless, honestly, in my example, the only system I know that is immune from that is the daily or higher time frame kind of PTP momentum strategy. That's the one we teach in the PTP course. Because I've just, through personal experience, all the students that I've taught, they've had the same results, regardless of whether there's high volatility or low volatility. And kind of extensions upon the same thing are that I'm talking about in this kind of diatribe is individuals who have built a good steady system and are looking to build a secondary system on top of that, supplement their income, or find other alternative ways to trade. So it's cool things to keep in mind and talk about. Okay, let's put that back where it was. Okay, sounds good. All right, so we talked about Ethereum, we talked about Bitcoin, a couple other things. Yes, we can look at a couple other things here that are on minds. A lot of these altcoins are looking, so I'll tell you guys just what I'm doing, and then we can go from there. So a lot of these altcoins are in good dip buy opportunity zones for reversal baseline bounce opportunities, and we can really see it. Let's just go to Binance margin, for example, and we can just kind of scroll down and see that all of these look the same. What we recently saw on a lot of these is price being below a baseline and then having a nice uptrend above a kind of buying climax and then returning and trading right around its baseline again. So in most cases, we're going to consider that a buying opportunity. Price has started to trade above the baseline, indicating that positive momentum is there and that a bullish uptrend might emerge here or continue. But price has actually given us a pullback opportunity back down to the baseline, and we're looking for that reversal baseline bounce entry and opportunity. Now, depending on the asset, some of the altcoins are trading above their baseline. Some altcoins are trading below their baseline. And again, this is going to depend on what baseline you're actually using. But again, they're all roughly the same. So unless you're using a very long one or insensitive one. But again, most traders that I know who are using the system are using something around a 50 or 60 period. So somewhere one standard deviation around 50, for their length setting of their moving average. So again, we can kind of see that on Atom again right here. We can see that on basic attention token is not the same here. Neither is BCH, neither is BNB. Let's go back down here and find more. Again, EOS, Ethereum Classic, IOST. Again, all of these roughly trading right around their baseline. So high volatility. So again, a lot of these in good dip buy opportunities. And again, kind of that same ascending trend line. So my overall opinion of the market is relatively bullish right now. I'm not in a bearish mode. I've found over time and through constant getting slapped in the face, I guess, that it's always good to be a bull in a bull market and always good to be a bear in a bear market until you have that higher time frame trend flipped confirmation. So let's see here. How are we doing on time? 11:51. Okay. So yeah, I don't have too much more on BTC and Ethereum. Again, I guess the point that I wanted to make was this. So let's take IOTA here would be a good example. So we're going to just plot out that same and just doing best fit lines. Again, plotting out that same ascending level of liquidity right here, that same ascending level. And again, that trend line can be helpful for setting those low bids as well, but that's not my personal strategy. We've got a couple options right here. Again, market continuation. The first option for entries at levels like this would be, let's say we just enter right now and we look to take price back up to the top of the range with 50% of our position, and then let the other 50% ride to attempt to get higher take profits or wait till an exit signal. Totally fine. Classic. If those entries don't, so again, the danger with that is, well, let's take a look at Bitcoin, for example. I talked about this on Bitcoin. So we're on Binance margin. Let's go to BTC USDT. Again, the problem with that is that on that movement up, we've already retraced a little bit more than 50% of that movement. Again, which in my experience means that there's more. How do I put this? Very few people entered here. Yeah, here we go. A good example. Very few people entered here. These are going to be algos or individuals who are running liquidity. Very few people actually trade that way. Most traders are entering here. So very similar. I don't think it's going to be as drastic up here. Longs got really offsides and we had this big liquidity hunt. But again, traders are likely to get offsides here. This is why I say don't buy the first dip. So again, having a limit bid right here is fine. If that trade's unsuccessful, then we're just going to have to enter at lower levels of support, seeing if Bitcoin kind of holds that same uptrend that we have. If that changes, then market flat or actually looking, those shorter term baselines are going to be flipping at that point in time. Looking for shorts back down to something like the daily baseline is not a bad idea, but that's counter trend trading. So again, the option there and the strategy there becomes wait until that lower price buy-in level, until you have a more significant level of support, whether you get a reversal baseline bounce or whether you get some kind of continuation signal. Otherwise, we're going to get a continuation signal on a higher time frame. I don't have a momentum signal here on the 4-hour time frame. We can see that IOTA explosion is not showing bullish momentum here. We can see where it flipped on this candle right here would have been the last uptrend signal. And then when did we get that exit signal? Right here. So that would have been a good trade from there to there. And then basically we've had no signal since then. We actually do have, let's see here. Now, if we were below the baseline, this would be a short signal as well. And so again, for those using shorter term baselines, for those who are just using a slightly different strategy, I can see that option on there. But again, those are not the trades I like to take. I like to trade in the direction of the trend. And so just waiting for that same kind of signal to emerge from here. Overall, again, I see a little bit more consolidation, move to the downside for a secondary move back up. From there, we're either going to continue, but I think we're going to probably have a little bit more recuperation from this before we actually move up here and crack these highs. Whether that actually constitutes a move back down to the ascending trend line or just another dip back down to this level of consolidation, just have to kind of wait and see for the market to show us. Take a drink from my Diet Coke here. All right. Let's see. Go over. All right. Now, one thing that seems to kind of strengthen my argument here too, we're just on the really lower time frame here for Bitcoin. This has been, a lot of people know this, but again, simple strategies are going to be looking for oversold areas, but it's not just oversold areas. So this is a range trading opportunity. Let's actually plot this out. So we get magnet mode off here because that's really bothering me. All right. So whenever you see a range, if you're attempting to range trade, mark out and things change. And let's do raise instead, because then I can show the two different levels. There we go. All right.
Right, how are we doing?
Not too bad. Welcome back, Jack.
Yep, just got all the requests logged. I wanted to shout out, I think Cavano Trades. He clarified that term for those Chinese phenomenon. It's called laying flat. I think if you just search laying flat documentary or something on YouTube, you can check that out. Thank you, Cavano Trades. You kind of, I was trying to scratch my head, figure out what that was called. I do have everybody's requests logged. Shout outs to Justin going strong today.
Doing my best, man. All right, so I was just talking about this range trading example. So for example, here we have after a large movement, consolidation is usually often the thing that happens. Sideways consolidation following a large movement often indicates continuation in that same direction, qualified within the trend overall though. So just wanted to point out something. It's pretty simple. Here we've got volume is important here. So look at where the actual movement to the downside stops. It's on this large spike of volume and the market moves up from there. We haven't seen a low similar to that. So the market trades in a tight range, relatively low volatility. We can see that volume relatively stays flat as well. And kind of let's look at our momentum oscillator here. When it goes high, sell. When it goes low, buy. Then simple and simple and simple. But when you're actually looking for a more significant move, you want to be waiting for, you typically want to be waiting for that volume spike as well. And that's the only thing that I haven't seen here yet, is kind of that big volume spike following that. Now, it's probably, obviously, it's not going to be the same size as that. This is going to be throwing off the scales a little bit, so it's actually a little helpful if we get off of that. But again, I want to be seeing, if I want to be seeing something that's going to break the upper range right here, I would be looking for a much more significant red volume bar on this down sell side pressure. Until you get that, you just want to be scalping these moves if that is going to be your daily strategy right there, or excuse me, your intraday strategy. I'll be a little bit more specific. We already talked about daily timeframes and kind of meso timeframes earlier. Okay. And I hear about Chinese something? No thanks. Box and bags.
All right.
A lot of requests for the D Live box, huh?
Somebody was trying to figure out how to hack it, I guess. Sorry, bro, it doesn't work that way. Keep trying to cook those commands. You might get there one day. Let's go ahead. Well, I guess, are you ready to get into the request section? Or are you still doing your TA, Justin?
Yeah, let's rock.
All right. EA comes your way next, guys. Just getting the requests on screen now. You got a slightly different layout for showing off today's requests. All right. Good here. Here we go. All right. First request of the day. Bear with me, guys. One more moment. Here we go. First request of the day is going to be this $20 super chat that came by way of Mr. Ether Robert Warner. Thank you very kindly, sir. His request is for Hex USD. Mr. Ether writes, Hex USD, it's a beautiful day outside, and I love the new show format. Well, give Hexarino a look.
All right, let's do it. I saw a couple interesting comments in the chat, so I guess I kind of want to touch on those. So on TradingView, and I'm actually going to go over to CoinGecko here to confirm this. So again, I do see Hex USDC on Uniswap, Hex USDT on Uniswap, and Hex USDC on HoneySwap. So let's go over to CoinGecko. And somebody had said in the chat that the majority of liquidity on Hex, or the majority of liquidity for Hex was going to be on Uniswap. So let's go verify that that is the case. All right. Here and go to markets. Okay. So 31%, it's 45%. So yeah. About 60% of all traded volume on Hex, actually a little bit more, yeah, is going to be on Uniswap, okay? Trading against USDC, and Ether. And then we've got a pretty big chunk of the BTC market on Bitmart. I remember the Bitmart back in the day. I remember when we were first looking at this when Hex was a small thing.
Yep. Hasn't seen too much adoption, to be honest, across centralized exchanges.
Yeah, and I think that's by design. So anyway, and then so let's talk on that. Is Hex gonna be somewhat immune to price fluctuation in the event of a market crash, with the majority of its liquidity on Uniswap? Let me think here. I mean, it would be novel to see something that had obviously, okay, two things. One, whatever happens to something's price is going to depend on arbitrage. And I guess kind of the nice thing about these markets is that this is available on a lot of markets, but on a lot of these markets, you can see that the volume's small. I mean, we've got 24-hour volume of 9 million on the main trading pair USDC on Uniswap, 4 million on the V2 USDC. People just haven't moved their liquidity pools over yet, or maybe aren't incentivized to do so. And again, HexWeth, 5.8 million. Now, if you just compare that with the average, with the 24-hour volume and the percent of volume on other exchanges, There's not a lot. There's not like large scale arbitraging opportunities, and it's not like a lot of these things. Well, I mean, obviously, people can write their own customized bots to interface with these platforms as much as they want, but this just isn't the opportunity for arbitrage. There is not going to be as easy as others. So, on the face of the argument, that does make sense there. The way that outside of arbitrage, decentralized exchanges would really have no way to evaluate something, right? Because the price of something is determined by the market auction, by the auction market theory. If something's willing to pay more for something, then it becomes more valuable. If individuals are not willing to pay as much for something, then it becomes less valuable. So on a centralized exchange, we can see that very clearly in the order books. However, with Hex being mostly focused on a decentralized exchange, if they're in the event of a market crash, that arbitrage opportunity is going to be slower to expand. So although I don't think completely immune on the face of it, that does make a little bit of sense. It would be slower, maybe a little bit, in my opinion, to depreciate. But again, you also have to look at like what is the value, and this is something that Mr. Ether could educate me on. Like, what's the current risk to sell, or what's the current penalty to sell, as opposed to holding? Because I know that Hex was specifically created. It has a lot of things in there for incentivizing individuals to hold. So that's one reason why it got to where it is.
They have the locking and staking, or basically locking, and you probably pay a penalty to exit if you are currently locked up. If you have your Hex currently locked up. But I mean, I understand there's like an idea here that unlike a centralized exchange that could probably clear through a lot of orders in a panic, it's possible that between, yes, a lot of the Hex holders having their tokens locked, and when there's a panic on the network and everybody tries to slam their orders through on Uniswap, I don't know, like Ethereum, the network doesn't do a good job of clearing that the way centralized exchange would. So I could see people in the panic trying to get their Hex liquidated on Uniswap, and then they have the gas estimate comes up, the gas starts surging, and it's going to cost you say $1,000 to swap it. I could see a lot of people being like, oh my god, this isn't worth it, this is too much of a panic, this is going to cost me too much to get out, I can't afford to have this crazy transaction fail. So I think there might be something to this idea that if you can't sell it, you can't dump it, and therefore maybe there's some immunity to a massive correction.
Yeah, absolutely. All right, let's take a nice look at this. So let's look at this weekly time frame, and what I want to do is, where do I want to kind of, where does okay, so first off, on the weekly time frame, Hex was building momentum, and we've got Hex first kind of give us a couple different long signals over here on the weekly time frame. This one that didn't have much follow through as far as the weekly time frame goes. This one that bought the top, because we've got a very immature market here. We've got, again, although there's appreciations in there, we didn't have the absolute insane bananas move that we had. Really kind of starts here, where we do actually have a good signal on the short, for about a 3-week signal, and then momentum starts really building up on Hex here, April 2021, and then we just have this huge run, 4,562% to the high that we put in with USDC. That high is going to be about 51 cents, about 52 cents almost, if we round it up. Now, from there, from the very top, let's see how much of a retracement we've had. We have had a 72% retracement. So I would not be surprised if, let's reset this chart. I'm going to start drawing out some resistance. So we're just going to take it from here. That seems about right. Yeah. So about a 786 retracement. You can see that overall that golden pocket did not do too bad there. So I'm going to give you the moonshot. Mr. Ether. And then we'll kind of work from there. So if price did what price normally does after a parabolic movement, which is move back up 50%, be looking at a short-term target right there. And then your moonshot is going to be up here at the full movement. And the 1.618. Okay. All I did there, guys, and this helps if you're doing, this really does help. I've done this a lot. You can go back and look at my old videos on this. As much as I talk, as much as I tend to not use Fibonacci, well, as much as I absolutely almost do not use Fibonacci for short-term or daily day trading, when you're looking at investments and when you need logical take profit targets, or where you need areas where you need to take action, keep in mind that half the battle is having a plan. So it doesn't really matter what tool you use, as long as you have a tool that has some form of reliability that you understand, and that if price goes to those areas, remember the market is a random walk, you have a plan, then you are 10 steps ahead of your average trader. Okay, so up at 0.39, let's say you're buying this dip up at about 0.39, so at about 40 cents, I would be looking to take profit. Upside targets above that are going to be 65 cents and 96 cents. I think, what is that? What's up with the dollar dream? You know what I mean? You know, a lot of assets just wanting to get to $1. I remember Dogecoin, obviously Shiba Inu, and of course Hex is going to be no different. Let's see. A pretty logical area the price came down to retest. Again, we put in this shelf right over here with price. This is where the uptrend stopped momentarily and some profits were taken. And a lot of individuals entered here. And then we started to get the retail coming in here toward the top, which was sold to, and prices moved back down. And buyers who bought this area, who bought this dip, have protected their overall interest. Now we are on the wrong, let's see here. We are on the wrong side of the weekly baseline. Making this not really the most attractive asset for me to enter on momentum. We haven't flipped on WATA either. So as far as the weekly time frame goes, the only option you have here is kind of the grid system of DCAing, which I only do with the things that I have the most faith in. So for Mr. Ether, I wouldn't be surprised if Hex was an asset like this. Hex is not an asset like this for me. I don't have a lot of long-term faith in this because I just don't understand it. This is something I would do with things that I understand, like things that I wanted to add to my long-term portfolio. I think this is a method best used for things that you have the temerity and courage to hold for the long term, whether or not you understand, or excuse me. Now, when it comes to things that I just want to trade, I'm just looking to make money off of things, this is not quite there for me yet. I'd need to actually see price back above 29 cents, back above that weekly baseline for this kind of looking for those long trends. Now let's go to the daily. Go to the daily. All right. It's on D1. Okay, cool. So this is going to be nice and smooth. And again, let's just look at, I mean, PTP did really, really well here also. Caught this uptrend. Caught this uptrend. And you can see here that we pretty much stayed above the daily baseline until price actually broke down, and there was quite a profitable short on the table. Whether you entered here and took profit here, and then again you have two almost, one not quite, but then here this reversal baseline bounce opportunity. And I think you're likely going to have another one in the future. So we do have a downtrend in Hex. I would actually be looking to again, it can't really short this, but I'm just saying if you could, that would be the direction I would want to be trading on the markets. I need to see, again, that same thing, almost coinciding with exactly what I saw on the weekly chart, but just a little bit lower, about 28 cents. I need to see a clear break of that. And then I just need to see that market shift over to the other side. That's not the only thing we need to see. We do need to see positive momentum be put in here. Overall, this doesn't. So right now, you've got two strategies for this particular asset, strategies that I would recommend. Buying high volume or peak momentum dips with, you know, preferably coinciding with oversold territory, and then taking those back up to the daily baseline. Again, you kind of have that same opportunity here where you have a rise in volume, you have a rise in momentum, and then it starts to peak off. You can see the same opportunity here. You have this rising, spiking red momentum, and then momentum starts to peak off, coincides with an oversold territory. Let's see if we can find another one over here. Not really an opportunity there, but again, this is the same structure that you would look for. This just didn't lead to the follow through that you wanted. But again, you can see that momentum rising. This is the red columns rising up, and then momentum wanes on that green candle. Momentum continues to wanes. This would not have been a bad entry area to try to take back up to the daily baseline, but did not. That just wasn't a good trade. That's not what the market decided to do. Over here, this looks far more likely. Again, you can see the same thing. Momentum rising, right? Momentum rising. Volume rising, and then momentum wanes, coincides with a pretty low reading on the on our momentum oscillator here. A little bit of bullish divergence here as well. You can see price puts in a lower low, but our momentum oscillator puts in a higher low. So nice bullish divergence there. And you got a nice pop trade right there. So between here, between 20, we're trading at 24.75. Between here and 28 cents, I'd be looking to take profit off this particular trade if you did buy this low. If that's not the trade, then again, you can't short this. So an entry here doesn't really make sense. So yeah, I need to see price above 28 cents to be a little bit to be bullish on this asset. And since we're talking about a Uniswap coin, I'm really not going to get into short-term trading. I've never found that to be profitable for me on Uniswap, especially with gas fees, especially with how convoluted and complicated it can be. It's just not my jam. I don't really think it's worth the effort, especially when you can just go over to a centralized exchange and trade and make dollars and cents relatively easy. So that's what I see, Mr. Ether. I'm sorry that I don't have the long-term opinion on this, but I do have price targets for you to the upside if you want, for kind of the long term right here. There's going to be at 39 cents if price just does a 50% retracement following the 786 correction. And then we've got 65 cents and 96 cents. Those are going to be targets for potentially the next rally. That might take weeks, that might take months, that might take years. And it also might not happen. Yeah, we'll see here. This is, I mean, isn't this a very common chart? Let's just look at Dash. Let's just go back in history on Dash, right? Let's see here. So this is kind of this doesn't look the same, but this is similar. Let's just go back on Dash. This is back in 2019. We have a big run up and then a large sell, and kind of that 50% correction of that, and then we just go sideways for a very long time until our next rally, right? Let's see here. Basic attention token is another good example. We've got a couple more years, whereas Hex doesn't. Big run up, retracement, 50% correction, and then we pretty much just go sideways for quite a long time until that next big run up, which took about took about another year for that to occur. You see the same thing on. Oh, we can see the same. We can see it. Let's see here. To go to Litecoin USD. Okay, here's a good example. Okay, so on the weekly charts, go back to 2016. But again, big run up, and then let's say, I guess the here, this looks just like X. This looked like a lot of altcoins following that 2017 pop, right? Big run up, correction. There's that 50% retracement, and then we don't go skywards. We go downwards, down. Long periods of consolidation, and then again, the next bull market came in 2021. But again, Robert, I know this is something that you quite like Hex. You've held this for a while. You did the research on it, so I mean, play it right, see it through. I know you do the right thing.
All right, there you have it. There was an extensive look at Hex. Shoutouts to Mr. Ether. You certainly got your $20 super chat worth of Hex analysis today, didn't you? Shout out to my boy Richard Hart. Look, guy's looking super fly. I really like that fiber optic Birkin bag he got. That looks fly. Those Louis ostrich leather slippers. Those are crazy. That guy's got some crazy luxury tastes. Seriously, I'm not even kidding. I do like his style. He's definitely flaunting it pretty hard. I wonder if all those live streams flaunting those $100,000 Birkin bags is turning anybody off from buying further Hex. Well, there you go, Mr. Ether. There is our look at Hex. Let's go ahead and get into the next request. Also, oh yeah, D-Live chest. Guys, get your lemons in, because I'm going to open that D-Live chest, say, in 4 minutes time. All right, guys? Lemons come away in 4 minutes. Next request, we have the following. These are a little obscure, and actually, we are kind of low on time, guys. Quite frankly, we're not going to get to every request today, so I think I'm going to go straight to giving Justin his pick of the litter. Shall we? I'm going to start reading out requests. Justin, tell me if anything catches your attention. Alexo81SG requesting RFR and VSO today. I might need to work some magic for the USDT valuation. Okay, so RFR and VSO, never heard of them. SLP, I believe that's Smooth Love Potion on Binance from ETH1. We have UMA. Murdoch the Murloc wants to look at UMA and BNT. We have Noya. Somebody by the name of Omur Habikin, can you take a look at NOIA today? I like the project and the chart, but I trust your expertise more. So that's NOIA. Monero and Algo for Wayne A of the chat. Let's have a look here. Epic Cash. Any word wants to look at Epic Cash. We have Ocean Protocol here for Fifth Ronin. Big shout out to you, Mr. Fifth Ronin. Vancity on Twitch. Can you check out Sand? Yes, the Sandbox token. And finally, Anthony Cox wants to look at QRDO and EXRD. Never heard of those two. And there's also a request from Mike Maker for Algo and Ripple. And that's it, Justin. I've named off some requests. Anything there catch your attention? Requests are listed in the top right corner.
Yeah. Let's. I'm just gonna go kind of up from that hex. I think these seem like the ones that you had originally picked out. Let's. So I'm gonna check out this RFR for Alex SG.
All right, RFR. Up first, he's requesting RFR Bitcoin or Bitcoin or USDT. Oh, okay.
I'm gonna assume this is Referium. Referium. I was gonna be like, what is this? Like a refer token. Number 544 as far as market capitalization goes. Currently, just today, it's up 1.9% against BTC and down 1.7% against Ethereum. Take a look here. Total supply of 5 billion coins, circulating supply of 4.877. So we are almost at fully diluted value. Let's see, total market capitalization of 81 million, and we've got 6.256 24-hour trading volume. All right, let's see. So we want to go just looking here at the whole year. RFR, big run up, retracement. We haven't really seen price get able to put back up to those peaks. So we'll take a look at that here in a second. Oh, we got more on RFR. Let's go back and look. Let's see here. This is going to be, yeah. So RFR seems to have launched in 2018. Again, that initial big pump up, long period of consolidation, and then the rise. Honestly, I really think this is, again, so just looking at this price chart, and knowing crypto market cycles, this is generally not the time to be buying in for the long term. This thing is likely going to have a wave of selling that continues, very similar to what we saw over here. These periods, as kind of painful as they are always the best places to get on projects for the long term. And these are going to be areas where we can just trade. So we do have this nice uptrend here. We can ride, and we'll be looking at kind of momentum trades and trends. We'll get to that in a second. Let's go look at markets. See where this bad boy's at. Up it, gonna be up it, and we do have almost all of its volume. 99% of its volume is going to be trading against the Korean won. So we do have a Korean token right here. Let's go ahead and see if we can't pull it up on TradingView. Right here. Okay.
Lemons going out.
Lemons going out. We've all been warned. Okay. All right. First thing I want to do is just kind of get a glance at this. So the first thing I'm just going to do is mark off what is likely to be strong support. And then the first thing that and then the next thing that I'm going to do, which, again, we really only have, looking at this kind of large blown out level, obviously we really only have one. That's going to be, two really. That is going to be the current market bottom, floor of price. And this resistance level right here, after the token was initially launched on Upbit, we had a little bit of a rise. I mean, obviously that's a lot if we just kind of get rid of that. That's it's a 65% run. Then we go into this long period of sell-off and accumulation. You can see here, right here on these weeks, this is when this coin was accumulated. Look at these large volume spikes. That's when this coin began to get accumulated. And then just a little bit later, it gets promoted, and we have this massive 900% run to the upside. Let's see here. Same thing here. We have accumulation on this candle right here. And then we have retail. This looks like, honestly, although that's a lot of money. This looks, whenever you see these wicks, it's a little coordinated. You know what I mean? So, kind of looking like this pretty classic pump and dump structure that we've seen right here. All right. So let's go ahead and mark off strong resistance now. There's going to be this order block. Again, order blocks is going to be the last. It's either the last green candle in an uptrend before a correction, or the last red candle in a downtrend before the correction. So this is going to act as our area of resistance. You have a lot of trapped buyers, unfortunately, here, because this is where a lot of retail, unfortunately, entered into the market. This is right after the pump. People are going to try to get in on this and follow. This is just how retail works. $34 to 48 cents. $34 to $48.40 is going to be very hard for the market to get over this. It can, but you just need to have another wave of retail euphoria. Let's see here. All right, so far we seem to be establishing an uptrend right here, just off of this dip. So we'll see there might be a buying opportunity when price pulls back and corrects to roughly the $15 to $16 area. Just kind of have to monitor price and get on the lower time, like the daily time frame, and see if you have that opportunity at that point in time. So as far as the higher time frame goes, this does not look like something I want to be entering for the long term. Really, the strategy that I see with this is hoping that this thing continues to kind of respect this uptrend that we seem to be establishing here, and just kind of buying and selling as price gets overbought and oversold, hoping that we kind of get an opportunity to get back up to this area. Obviously, you're not going to be able to short this on upbit, but then again, I do see 2, 3, 4 maybe opportunities to buy and sell this as price goes forward. If that's, I don't think we have a lot of Koreans watching the show, but again, there's nothing that precludes you from trading this. Let's go down and see if we have any opportunities on lower timeframes now that we have that kind of established and instantiated. Daily time frame, let's pull back our momentum oscillators. Let's see here. We are starting to get a little oversold. There might be a buying opportunity here. Again, you've got downside potential about 20%. Yeah, I'd really want to be seeing something different. We don't have any divergence here. This is price put in a higher low here, and the momentum oscillator is putting in a higher low, and we actually do have a bearish momentum. So there's nothing really, again, this is not trending to the upside. We can see that WATA catches this when this starts to trend to the upside here. WATA catches it when it starts to trend to the upside here. WATA catches it when it starts to trend to the upside here, and that actually would have caught that big pop. This is just on the daily time frame right here. And then momentum rises on this candle, and then on the very next candle, you have the huge take profit opportunity. Right up into that, again, that sell side zone that we kind of marked out and demarcated over here, that daily order block. Now we could actually be here on the daily time frame. We could be a little bit more specific with this. We could either say this is the order block, or we could either say that this is the order block. But either way, I think that cutting it that kind of high and that low gives you a good idea of where the trouble zone is, or where the problem zone is going to be. Again, you guys can see this established uptrend. Let's see if this continues. That does kind of present tradable opportunities. And there you kind of go as well. You do have that demarcated kind of level of resistance as well. So kind of some take profit opportunities as it widens. Yeah, this is something that's obviously on my trading list, or something that I'm trading. I don't see any momentum trades, any PTP style trades. And again, the only opportunity that I see here is either looking for kind of that reversal dip here, but again, very low volatility and very low momentum. So there's just not a lot of attraction here for me. If I were to see price come back down here closer to that $16 mark, I would be a little bit more, I would be a little bit more enthusiastic or positive about it. So I don't see, again, it's just right in the middle of the zone right here. And there hasn't really been a high volume dip buy opportunity, and we just had another like big flash pump. So right it back up into that trouble zone. So now you have even more trapped buyers up here. So this would be a coin I would avoid. You got a lot of trap buyers in this coin, much higher above you.
All right. Well, that would be a look at RFR, Reefer Addict. Gotcha. There is your look at RFR. What else do we have left? We have 3 minutes left in the show. I don't know if you want to begin to wind things down, Justin, or if you'd want to tackle one final request. How you feeling?
We can do one more. Let's look at that smooth love potion.
All right, SLP, you are in luck, my dear. ETH1 of the live chat. Justin's opinion about SLP USDT on Binance. Okay.
All right. Back out to that weekly time frame. You know, I do like where I like where SLP is here. Just looking at where we are based in relationship to where we've been before. A lot more trap buyers up here, and we've had an opportunity for price to really come down low. I'm not gonna lie, SLP kind of looks like it's in that range where you want to begin accumulating for the long term. And if you guys will recall, I just want to go back. Let me go back to that RFR KRW chart here. Okay. If you guys will recall, what were signs that whales were beginning to accumulate RFR? Okay, it's this long period of consolidation, and then what? The volume spikes. Volume comes in before a trend or begins on a trend, right? So here you can see that the volume came in. This is where the large scale accumulation happened. And then this is where those individuals were taking profits and all the way down as well. So now with that in mind, let's go back over to USDT. What do we see? Right? Same volume spikes, long wicks, long tails, right? And we're not in an uptrend. We've just come down, right? So this is a little different from what I normally say, or from what I normally go for. But SLP USDT, that's a very interesting sign to see. That's a sign of whale accumulation. You can kind of see it over here. You can kind of see it over here, right? We're just, all this is just people coming in and buying up a ton of this, and their goal is to initiate another uptrend like this and go for broke on the SLP. So this is actually going to go on. It's actually going to go on my personal watch list. I do like where SLP is here, and again, that's long term. This might, this uptrend might happen in a couple of days. This uptrend might happen in a couple of days. This uptrend might happen in a couple of years. But let's go down now and see if we have anything beyond that. On those lines. I know exactly what they're from. Okay, that's cool. Yeah, I mean, we're at the pretty much lowest area of the chart that we've been at, right? And we actually do see as well the market's starting to put in some higher lows, right? And if we just connect these candle bodies, we can see that it's happening here as well. Okay, so pretty much anywhere between here, price is currently at 7.23 cents. Anywhere between here and 0.0625 cents. All right, so 6.25 cents is going to be looking at. I'm going to make a TMI coin. Don't steal my. Stop it. We're between here and 6.25 cents is a relatively good buy-in area for that particular strategy. And again, looking at take profit areas, we've already demarcated them up here. Trouble zones of the market is going to be between 12 and 14 cents and 21 and 23 cents. Those are going to be the train stations, and everything in between is going to be the train tracks. So some decent opportunities there. Let's look at. No, nothing really here. So we don't have, you can see, this is the explosion level. The explosion level is falling. This is kind of very similar to watching volatility contract. The Bollinger Bands would be getting relatively tight on this asset. For example, showing you that volatility is contracting, and high volatility follows low volatility. So, now this isn't a guarantee that SLP is going to pop. This all depends on the marketing campaign that follows through with SLP, or the shilling that's done by the individuals who are holding this token. this doesn't look bad to me, and is an accumulation area for SLP USDT for the long term, or for kind of that long wheeled trade. Again, take profit areas are going to be these zones right here. There's other areas, there's other ways you can come up with take profit zones as well, but I like those for the short term. And just if price were to do that, looking at a 200% gain there and a 90% gain up there, breaking out of this area. So you get 90% on the table and 200% on the table. The smooth love potion USDT on Binance. Let's rock.
All right. Well, ETH1, my man, your SLP request is done and over with. That would be that'd probably be the end of today's show, the Thursday installment. In the cracking cryptocurrency market update is pretty much over. That's right. I think we're going to be, spoiler alert, I think we're going to be shifting away from the breaking Bitcoin branding as much as I love it. We are going to be, I think, consolidating our branding a little bit, right? This is, of course, cracking cryptocurrency, and maybe the breaking Bitcoin branding to the daily podcast is a little confusing. So I think I have to start training myself to addressing this as the cracking cryptocurrency market update. With that said, guys, not a whole lot more to add. We will be back, of course, tomorrow. The Friday edition of the Breaking Bitcoin Cracking Cryptocurrency Market Update comes tomorrow. Jason will be back tomorrow. Looking forward to having him do the TA. And of course, Jason is usually a powerhouse. He does knock out at least a dozen requests. So we'll probably get through quite a few more tomorrow. Shout outs to everybody who kicked it with us this afternoon. Thank you, Mr. Ether, for that super chat. And big shout outs, final words to the man of the hour, Mr. Justin Wise. His Thursday appearance is in the bag. Final words, my man. Do address the audience, and we'll get out of here.
Yeah, thank you guys for coming, man. It's obviously an interesting day in the markets. Again, I think overall, on the go. No, she's getting there, man. She's getting there. She understands, is the market going up? Is the market going down? I think a lot of individuals always get concerned when we correct from a high, but I don't see why. Overall, I've got a relatively positive opinion of the market. Maybe not over the next few days will we see that materialize, but certainly over the next few weeks, I think it's much more likely. Just keep you guys' system sharp and tight. Try not to get too sucked in by the news. Be looking for those good opportunities out there, and just continue improving what you're doing. We've got a lot. We've got a lot of opportunity ahead. And again, we continue to say this. But this is still an awesome and interesting place in cryptocurrency's lifetime, where there really are just tons of opportunities out there, guys. So be safe, be careful, trade carefully as always, and we'll see you guys next time.
Yep, stay out of trouble, don't get wrecked. See you guys tomorrow. Peace.